What's up, squad? Today is December 15th. We're gonna run through the crazy clean setups of the day. We're gonna look at the little tiny scalp that I took today, and then a huge banger setup that you could have taken the house you wish I opted into. We're gonna analyze price action, take some lessons, take some psychology, all that stuff. So without further ado, let's just hop in, bruh. All right, so let's just hop in, fresh chart. I'm gonna show you guys exactly how I analyze all of this from literally naked chart to seeing trades into fruition, right? So going into the day, let's just start bigger time frame analysis. What are we doing, right? We came all the way lower on the daily, right? Now we're starting to get some kind of bounce off of this level, right? We're just showing the whole entire narrative right now. So I get my bounce. Okay, now what do we have? We have a daily change right here. Boom. Okay, now we look to be bullish. Where do we be bullish to? Maybe all-time highs right here. Definitely this buy side level up here, right? All that stuff, right? So what we do is we come up, we sweep that buy side level. Okay, cool. So after sweeping that buy side, what is the market now doing, right? We slow down, we tap it. Okay, now we're super slow for literally 5 days. And then on the 5th day, we internally manipulate right here. This becomes our stop rate. And now we can look to go into free fall mode, right? We can either look to go into free fall, hunt all of these lows down here, and even go further, right? Or the near-term draw that I'm marking out and I'm playing off of is going to just be equilibrium of this entire range right here. So let me just pull that up really fast. Look at something like this, right? So I'm looking to see price pull all the way back to equilibrium. This is a very good draw for me, or to see price start to rest within this fair value gap that we're in right now. So now let's go a bit lower. 4 hour, what are we doing, right? We now just swept this big time frame buy side level, right? We came up, we did it again. So it's 1, 2, 3 drops pattern. Now we go ahead and we inverse all of this order flow right here. All this order flow gets inversed. On the 1 hour, I bet you this is even cleaner. I'm gonna go ahead and take this off right here. Actually, no, it's not too clean on the 1 hour, right? But on the 4 hour, we go ahead and inverse all that order flow, make a really nice change in the state. We enter this big fair value gap right here. So I'm marking out all of this, right? And then what happens? So big fair value gap, boom. 2 areas in which I want to see price reject. I like to see some kind of area within this, right? We can also pull out equilibrium and boom, what do you know? Price rejects right around there, right? So coming into the day, I'm trying to figure out, are we gonna go higher or lower, right? Because on NQ, we did actually take this low right here. So we do have some of that SMT, but on ES, we didn't. So it's not my job to figure out, okay, what is price gonna do, right? Are we going to go lower today, or are we going to act on this, go lower, run all these, or are we going to act on this SMT and run price through these imbalances and then run higher, right? That's what I'm trying to figure out. So when I look at this and I say, what is going to tell me? First, there's a couple things, right? There's a couple things that can tell me, right? It's going to be, how is price forming on this retracement, right? Because when I open the market, my data is up to here, right? I don't have any of this. So at this point, what is price action telling me? It's telling me, okay, we're generating liquidity, right? Maybe on the 15-minute, we've made a small little change in the state right here. We're just barely getting above that. We might want to run through this, but I'm not too sure and I'm not too confident, right? Okay, what else is price action showing me? It's showing me we're now coming up to sweep this 15-minute high that's ready to equilibrium. We're now slowly generating liquidity. This is the biggest thing, guys, the generating liquidity, bro. If you can read the algorithm, read price action like a language, and you can see this, that's the biggest sign that we're going to be bearish bias for today, right? So that's another thing. We're coming up to sweep this buy side level. Okay, we're coming to equilibrium of the range, right? What else do we have? Okay, now we're starting to enter into this 30-minute imbalance, right? And this is all things that I find by looking at the chart within like 5 or 6 minutes, right? Just simply watching, you can see these things, right? Another thing, what else do we have, right? We have completely untapped session levels, previous daily low, Asia low, London low, and now we have New York opening all the way above, right? We have nothing but generating liquidity ready to run, right? And what else does this structure tell me? Final thing is it tells me midnight open is sitting way below where price is currently at, potentially telling me that we might want to start rebalancing all the way to midnight open, right? So let's mark that line out right here, midnight open. Okay, now I have a pretty bearish bias, right? At least I want to see to this low sometime or to London low and open, but I'm not just going to take a trade without confirmation. And this is where I get kind of stuck up today, right? So on the 1 minute chart, this is the cleanest on ES, right? Literally, we open the market. If we were going to snipe this, we'd need this exactly, right? Open the market, manipulate higher, run this final stop, tap into that imbalance on the 30-minute right there. Now I want to see my entry model, right? Which is going to be that inverse, that new fair value gap, and that change right there, right? So once I see this all happen fast, that's when you can hop in the short. I wasn't even on the charts yet. I'm keeping it to 100. I wasn't on the charts until right about here, until your first TP already gets delivered. So there's no way that I could hop in this trade. If it was me taking this trade, you really have to be convicted here, and you have to not be advanced, right? Because this is not an advanced trade at all, right? This is incredibly simplistic trade. But I think what you have to do here is be very convicted in exactly what you want to see, and once you see that, act on it without hesitation, right? Because this is incredibly clean right here. However, how many people are really going to want to be taking a trade like this literally within placing their order the second minute of market open, before we even have first presented for value gap placed in, before we have all these things, how many people are going to really be like that, right? I'm not that type. So that's probably most likely not going to be me, right? So that's why I didn't take this trade. If you took this today, I thought this was probably the cleanest setup of the day. And then understand that this is not your first TP. Because why? Because this is one of those lows that on the 5-minute chart, I would mark this like this, right? I would mark this right here, and I would put this as a dotted line, or dotted line. Why am I putting that as a dotted line, right? Because that's not a big solid line that price is going to bounce off of or retract to or pull back to, right? Because that is simply one low in the sea of low resistance liquidity here, right? What are the levels I'm actually marking and I'm holding full TP to? To London low, all the way down here, right? Why does this low matter even if it's not London low? Because it's London low, right? These session lows actually matter just because they're session lows, even if they look insignificant, right? So market will most likely generate those levels, right? So, or run to those levels. So we have London low and we have Asia low right here. This is the cleanest opportunity of the day, is to look to get involved between the taking of London low right here and the initial push between here, because once you see that 1 minute start to displace and we get somewhere around here, that's when we know, I'm pretty confident that we're going to run all the way to here, right? But then it just depends, how do you get involved, right? You can take first presented for value gap, because we're going to check that out right now. First presented ends up holding very, very nicely, right? Right here, first presented, let me take these off. First presented goes right here. This holds crazy nice, and it just completely delivers you nicely straight to the draw. This is something that a lot, like, I don't mind taking this, right? But you have to be convicted, and you have to really believe this is now going to be displacement. I'm going to place my stop here, and I'm going to look for a really nice R all the way down to levels like this, right? You have to be convicted and stuff like that. And a lot of people, like me especially, I'm not convicted to just hop on the market and take a trade like this straight into open, right? So I'm always waiting for more, right? To me, on this whole ride down, I was waiting for this, right? I was waiting for some kind of pull back, right? And then an SMT like this, and then the push lower, and then the go, right? And some days the market doesn't deliver that, right? But I find I'm always more consistent. I am always more consistent waiting for this type of stuff than catching these straight down, like not chop, but just straight down kind of like the market's going, get involved wherever you can kind of entries, right? I usually find myself taking more losses trying to do that, because these days are rare compared to days that will move fast, slow down, do something like this, and then move fast again, and we can kind of get in there, right? So that's my take on this. If you got involved in this entire move, that's really good stuff, right? Let me show you guys where I got involved today, and then we'll look at this, right? Before I show you guys that, actually, I want to talk about this, because another reason that I don't think I would have taken this initial short that would have just banged today was because of kind of scar tissue. We'll put it that way, right? December price action has been, for me, pretty buns, right? I love to be taking better trades. I love to be taking nice RR setups, but like you guys will see today, most of my setups are getting stopped at break even after first TP. All these things are happening, right? And I'm having to adapt to just target low-hanging fruit. I'm having to kind of understand that that's how the market's working in this season, right? And because of that, I'm not the most trusting to look at a 15-minute chart that is at the current point bullish, right? And then take a 1 minute entry all the way up here based off 3 candles, right? I'm not the most confident to be able to take a trade like that, right? That's something that not only do you have to build confidence with, but you kind of have to understand every day in price is a new thing, right? So then it's kind of conflicting schools, right? Which school of thought do you subscribe to, right? Do you subscribe to, hey, conditions are bad, even if those good trades arise, I'm not going to take them because I know conditions are bad and most of the time I'm going to get stopped out? Or do you say, hey, there's a way for me to really discern this between the ones that look good and conditions will kind of overtake and make buns and not play out, versus the ones that are really good and actually quality, and those are the ones that when I take those, that's when I can actually get really nice setups like this that look good and actually play out good, not just look good and get destroyed because of December's conditions. You get what I'm saying? So that's kind of a thought process and the kind of thing that many traders are thinking about right now, especially in these conditions, right? I'm thinking about that. I'm thinking of almost being more aggressive, but not in the way of being aggressive, right? I'm thinking that most of my opportunity throughout December has been in these later hours, right? Like today, I took a trade around here, right? These later hours are where I've been getting most of my opportunity, right? And it's not because of this or that. It's because of these early trades are making big moves nonetheless, right? But they're either not that clean or I don't have conviction to take them because of December. So it's kind of a demon that I'm fighting in my head almost, and it's something that I'm realizing I need to really get rid of this and just trade what the market is showing me completely unbiasedly. And if December hurts, December hurts. Most of the time we should come out on top though if you just unbiasedly trade the market every single day, right? Things like that. That's stuff that I'm going on and stuff that I hope you guys are learning to kind of combat as well and get better at, right? So without further ado, let's hop into this next trade right here, right? So this is after, like I said, we came down, NQ goes ahead and it takes this draw. We'll pull over NQ super fast, just kind of show you guys what we're looking at. My chart got hella glitched out. Everything got moved down, right? But if you look over here, NQ takes this draw right here. So we're looking at this S&T right here, something like that. We'll draw that in really fast, right? And then we start to see this big push back up into the range, right? Now NQ actually pulls all the way back to equilibrium, I believe, right here. Yeah, we tap equilibrium and we tap OTE to the tick right here, to the literal tick. We tap OTE, literally like perfectly the tick. We tap OTE and then we start moving lower. That's a good sign for me, right? If we pull over ES, we did it very similarly, but with equilibrium. So over here, we literally tap equilibrium to the tick, I believe. Let me just check. Geez, I hate this stuff sometimes, I'm not gonna lie. 15-minute chart, let's check this out. So equilibrium is right where I'm looking to see price kind of reject that. So right here, we tap equilibrium and then we start to push lower pretty precisely, right? Where else do we pull back to, right? In this ES pull back to, we pull back to our breaker pattern right about here. So if we look, right, this becomes our breaker pattern. That's kind of where I want to see price pull back to, potentially tap, and then we can go lower, right? We almost pull back to midnight open, but not quite, right? Those are areas that I'm looking for price to pull back to and then reject off of, because I'm trying to figure out where in this range, if I'm still looking to take a short, which I don't want to take a long with all this imbalance price action right here. If I'm looking to take a short, where am I going to see that short play out, right? It's going to be after the market does everything to the upside to kind of appease the upside first before continuing with its downside agenda first, right? We get what I'm saying? So that's what I'm trying to figure out, right? And I don't need to know that and make a prediction that after this happens, then it's gonna go, right? I simply have to think in my mind, we've done this, we've done that, almost like a sequence of checking boxing. After we've done that, now I see the market's reaction, right? I'm just monitoring the market and realizing where can I get into it, right? So after monitoring, I see we've done this, that, and we've done this pattern and this, that, and now we push. Now we push right here. Right at 11:30, now is when we decide to push. If the market's pushing, that's telling you the market's going to be in that direction, right? So if the market displaces lower after doing all these things to the upside and we inverse these for value gaps, that's telling me the market's going to be bearish, right? So do I need to pay attention to most likely on right now on on why the market's bearish and if I believe that it's bearish? Or do I just trust that the market's telling me it's bearish by doing the bearish thing? You get what I'm saying? You don't have to figure out if someone's mad if they're screaming at you and punching you, right? It's that same thing, right? The market right now is screaming at you and punching you because it's mad at you. It's displacing lower and inversing for value gaps because it's bearish. You just have to look at it and monitor and say, yeah, he's obviously mad or it's obviously bearish, right? So after all this info, what do you do with this, right? So I see this displacement. There's two ways you can take this trade, and I'll tell you why I chose the way that I chose, right? You can look to just get involved on some type of like turtle soup or 5-minute entry and just place a stop like this and then target the rest of this and this and this. And then this ends up kind of getting just played around with for the rest of the day. And then I think eventually going in the overnight session. But be honest, none of us are wanting to hold through this overnight session. So it's not something that I'm advising you to kind of take, right? But the second way to take the trade, which is the way that I end up doing it, is you wait for the internal model, right? And the reason that I wait for the internal model is because I like to trade the 1 minute. I always find my most success on the 1 minute. And when I see this big of a move, that it's visible on the 5 minute, that it's visible on the 5 minute right here. That's when I say, hey, this is a 5-minute model. This is a trade someone could take on the 5 minute. If they can take this on the 5 minute, I can be more precise and take it on the 1 minute. So I wait and I zoom into the 1 minute. And on the 1 minute, guess what I'm finding? I'm finding my 1 minute entry. Where's our 1 minute entry, right? I need to wait until the market does everything that it just did before, but now on this fractal time frame, because the market's fractal, right? We know this, right? I'm going to draw you out and explain what did the market do here, and then we'll go back and look at before, right? So the market came, it generated this high, pushed lower, right? This goes through all these lows, right? Showing us we're bearish, right? This big move is what I'm kind of looking at. From there, we place in this low, we pull back, we tap equilibrium. Okay, now what else, right? We start to displace lower. We make a change in the state and a fair value gap. Okay, now let's go look at what did we do on the bigger time frame, right? As well, right here, we rebalance to where? To this inverse fair value gap right here. So drawing this out. This now becomes a buy side imbalance, sell side inefficiency, and then we pull it over. Since we inverse it, it now becomes a bit of a inverse or a SIBI, we can pretty much categorize it as, right? So drawing this in, let's look at this, right? So market displaced, pulled back to equilibrium, it performs a smart money reversal, and then it continues, right? Then it continues to hit internal TP right here, which is all that I traded to, right? So now let's look at the bigger time frame. What are we doing? On the 15-minute, we displace lower, we pull back to where? Equilibrium, and to where? Breaker block, and to where? Imbalance. Okay, now we displace lower, and then we fulfill this internal model TP, which is right here. So bigger model right here, let's draw this in. Understand this, guys. Bigger model right here, boom, curve, boom. This is where we see our bigger model, right? Now, in terms of this bigger model, we're now seeing this small model right here play out, boom. And then right here, this is where we see this becomes our internal model, right? That smaller model is our internal model playing out like this, right? And this is a very inefficient model because it ran an overnight session and it was at lunch hour and all these big things, right? But the principle still works because the market has to do what it has to do. Understand that, right? So literally the same thing. Rebounds to equilibrium, push lower, displacement, and we fulfill that internal model. Okay, now zoom lower, right? We did all we needed to do at the top. Now we came lower, right? Now we fulfill pullback, boom, smart money reversal, and we fulfill internal TP, right? So what do I end up taking? Exactly this, right? The way that I'd want to take this is to take that change in state entry because it's really nicely in premium, and then trade to this low and then leave runners for this low, right? That is the most dreamy scenario on how to do this. And what I actually end up doing is I see right around 12 or 11:56, right when we push right around 11:59, we start to go, right? This big candle, and I see these two barely come back tap. I see that doji. I realize, hey, if I place my order at this change, there's a big chance that I'm not going to get tapped because up until this point, the market has been pretty efficient, right? Chop a little bit, push, boom, imbalance, imbalance. Okay, now we're pushing lower. This can now be where we just give a sharp retrace higher. Now we push straight lower, right? So I'm trying to get involved in that fast move because I suspect it's going to be there. So I think market's probably not going to pull it back that much before it goes, right? So I end up waiting for that rejection of this fair value gap right here. Then I realize this is now a generated high. We can use that as a turtle soup. And then I place my stop somewhere around consequent equation for this wick just to shave off a few points, right? But still give a potentially inefficient model. I'm expecting that because we are at lunch hour, right? Even though I do think it will be efficient to the downside, I'm expecting there's a possibility that it is inefficient because we're at lunch hour. So I'm watching that and I'm saying, I'm going to give a potentially inefficient model some more room before I figure out what it really is, right? And then I leave my runners in, and my initial plan is to take 0 off here. Why? Because we're so efficient, and this should be a clear dump. This should be a very, very clear dump. All of these stacked lows right here, even though they're SMTs, if we're going to show that the market wants to go lower, it should be very obvious that, hey, we're going to go lower and we're going to run through all those levels, right? So I think it's going to be very clear that at the very least, we'll run to this level right here, at the very least. This is where I have my first take profit. I don't even have anything here. Now, once I see all of this start to happen, I see chop, 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 push lower. Okay, we're almost there. Oh my gosh, slow pull back higher. A break even stop out. Stop out everyone that was already too short, right? That was scared, right? I stick in the trade because I'm confident in the model because it just continues looking better and better, even though it's choppy, right? Technically, generated liquidity, step down, generated liquidity. Now, at this point right here where price was at right here, this should just be straight down all the way to here, right? So that's what I'm watching. That's what I'm convicted in. So I believe that. But once I see this, I realize there's a good chance right now that reacting to what the market's currently doing, it's a good idea for me to just take 80% off right here. So I end up taking about 80% off right here, stop to break even, and we get break even stopped right after that. What do I think about this trade? Honestly, I wish I could have made more money. I wish I could have seen a full TP play out. I wish I could have just had a better trade, more efficient price delivery. But the biggest lesson that I'm taking from this is that a lot of times in these conditions, right, and I'm making this a rule going forward, is that if we are past 11:30 New York time, I am going to trade low-hanging fruit only, right? Because a lot of times this past December, I've been getting trades like this, right? Really nice trades that give me everything I need, a really nice model, but we don't deliver full TP. We only partially and then break even stop me out, right? It's happened. If you go through my journal, every trade is only about 440 or around there because I continuously get break even stop out after partial one, right? But I want to be making the full 1,000, 2,000, right? I want to be making a lot of money on these trades, right? But the market's not giving me the opportunity. So how do I better adapt myself to what the market's doing, right? how I'm going to be doing it, right? And the example is perfect within this trade, right? So what I took was this right here, right? And pretty much we'll just draw this out to this low because that's where I took all my profit off, right? The way that I enter this is I enter that on the turtle suit and I leave that until right here, right? And I place my stop kind of at the top of this level, just kind of conservatively. I want to give it some room, kind of don't want to go too high though, right? That's what I'm looking at. And it's a 1.46R, which means if I took this off and make 1.5 times the amount of my trade, that's okay. It's not the best. I want to be around 2, right? Let's see, how can we make this better? Okay, how can we make this better and be more efficient? The best way for me to do this is to take a more premium entry, take all of it off of that low-hanging fruit, and then this is where you can get pretty spiffy, right? You can either place a very tight stop like this, right? And you can take trades like this, which in these inefficient conditions isn't the best idea because we can easily have a wick that comes all the way up to here, holds that consequent encroachment and then goes lower. And you're sitting there like, bro, why didn't I just trust what the model says to do, right? So because of that, that's why I'm taking that premium entry so that I can set the correct stop loss, right? And that would have changed my R from around a 1.46 to a 1.78, right? So really not the most, but definitely something to look at while you're trading, right? Definitely something to look into, right? But yeah, going forward in December, this is how I'm going to be trading. Past 11:30, I'm only going to be taking these premium entries, low-hanging fruits. Premium entries, low-hanging fruits. Those are the two mantras of the rest of December and probably even the first week of January. We'll see how that shapes up, right? But if we're before 11:30, let your trade run, bro. Let your trade run. Look at all this movement that happens, and then right when we get past around 11:30, lunch hour, we see this final move. Okay, now we're in the lunch hour. Boom. What is this, bro? And at times, understand there are efficient times past 11:30, right? But what is the common denominator, right? So if there's times where we're efficient past 11:30 and inefficient past 11:30, obviously time doesn't matter as much as we're portraying it to, right? So what is the actual thing that matters? It's going to be the objective, right? If we take both opposing objectives, like we did today, we are expecting inefficient action and we have to take low-hanging fruits or just not trade at all. What do you mean by both objectives? We take highs, we dump all the way to the other side of the market. What does the market do now? It's generated all this liquidity and it's used all of itself up. What does it do now? It has to regenerate more liquidity and then give itself more fuel right here, all of this generated liquidity to now go use later, right? It's very obvious and it's how the market works. That's AMB cycles. Accumulate, manipulate, use all that accumulated liquidity, now accumulate again, manipulate, distribute, all of that, right? So I hope you guys can learn something. I hope I can kind of open your eyes to some of the things that the market did today and make all this stuff kind of make more sense looking at this today. This is a super, super clean sell-off. I wish I could have got involved in this because this would have been some really, really crazy R. But yeah, I mean, without further ado, I'm gonna let you boys go. So hope you enjoyed the video. Hope you get some value and peace out.